Samsung's new battery breakthrough is disrupting the global silver supply. Global silver supply has been in deficit for 5 consecutive years. 820 million ounces gone. That's nearly an entire year of global mine production simply vanished. Samsung just announced mass production of a battery that requires 1 kilogram of silver per vehicle starting in 2027. The International Energy Agency projects 40.7 million electric vehicles will be sold annually by 2030. Do the math. 40.7 million EVs. 1 kilogram of silver each. That's 40,700 metric tons of silver demand from batteries alone. Global silver mine production in 2024? 25,000 metric tons total. For everything: solar panels, electronics, medical devices, jewelry, and now batteries. But here's the question that changes everything: what happens when a single technology breakthrough consumes more of a critical metal than the entire planet produces? This isn't speculation. Samsung SDI completed the world's largest solid-state battery pilot line in 2023. Mass production begins in 2027. Every major automaker is racing to secure supply. The battery delivers 600 miles of range, charges to 80% in 9 minutes, and lasts 20 years. It's the holy grail of EV technology. And it requires silver. Lots of it. This video reveals the documented supply crisis unfolding in real time. You'll discover why silver's 5-year supply deficit of 820 million ounces creates a structural shortage unprecedented in industrial metals. How Samsung's oxide-based solid-state battery technology locked into silver as the only viable material at commercial scale. The documented pattern from 1980, when 2 Texas oil magnates cornered 33% of global silver supply and triggered a crisis that reshaped commodity markets. Why industrial silver demand hit 680.5 million ounces in 2024 and is projected to consume 58% of all silver supply by 2030. How China's 95% control of rare earth processing created the exact blueprint now playing out in the silver market. This isn't conspiracy theory. Samsung's production timeline is published. The Silver Institute's deficit data is official record. IEA's EV projections are government-backed forecasts. The laws of supply and demand don't negotiate. The pattern is clear. The timeline is set. And the metal that will power the next generation of electric vehicles is already running out. The last time this happened: January 17, 1980, silver hits $48.70 per ounce. A 600% increase in 12 months. 2 men caused it: Nelson Bunker Hunt and William Herbert Hunt. Texas oil billionaires. Sons of H.L. Hunt, once the richest man in America. They didn't discover silver. They didn't mine it. They simply bought it. And bought it. And bought it. Between 1973 and 1979, the Hunt brothers accumulated 100 million ounces of physical silver. That represented 33% of the world's deliverable supply. They used leverage. Futures contracts. Shell companies. By 1979, they controlled more silver than existed in COMEX warehouses. The establishment version, reckless speculation by wealthy wildcatters, nearly destroyed the silver market. The documented reality: the Hunt brothers recognized a fundamental imbalance between industrial demand and mine supply. They were right about the shortage, wrong about the timing, and never anticipated the government would change the rules. January 21, 1980, the COMEX and CBOT imposed Silver Rule 7. New regulations prohibited additional long positions in silver futures. Only liquidation was permitted. The exchanges effectively banned buying while forcing selling. March 27, 1980, Silver Thursday. The price collapsed from $48.70 to $10.80 within 6 weeks. Back Group, the Hunt brothers' broker, issued a margin call for $100 million. The Hunts couldn't meet it. The ripple effect nearly collapsed several major financial institutions. The Federal Reserve organized a $1.1 billion bailout. The Hunts filed for bankruptcy in 1988. Nelson Hunt later testified, "$1 billion isn't what it used to be." But here's what you weren't taught in economics class: industrial demand for silver in 1980 was accelerating. Photographic film, electronics, medical applications. The Hunt brothers identified a genuine supply-demand imbalance. They simply tried to profit from it through market manipulation instead of long-term positioning. The shortage they predicted? It arrived. Just 44 years later. The silver that powers everything. Silver is the most electrically conductive metal on Earth. Period. Copper is 94% as conductive. Gold is 73%. Nothing beats silver for moving electrons. This isn't marketing. It's physics. 108 atomic number. 47 electrons. The outer electron shell configuration creates the lowest electrical resistance of any element at room temperature. Which is why 58% of all silver mined in 2024 went to industrial applications. Not jewelry. Not investment. Industry. 680.5 million ounces in 2024. A record. For the fourth consecutive year. Where it went. Solar photovoltaics, 197.6 million ounces. Each solar panel contains approximately 20 grams of silver. Global solar installations are projected to reach 600 gigawatts annually by 2030. The photovoltaic industry could consume 40% of total global silver supply within 5 years. Electronics: every smartphone contains 0.2 grams. Every laptop, 0.75 grams. The circuit boards, switches, and contact points require silver's conductivity. Annual electronics consumption, 243 million ounces in 2024. Electric vehicles: current EVs use 25 to 50 grams per vehicle. Battery management systems. Electric motors. Charging systems. All require silver. 17 million EVs were sold in 2024. That consumed approximately 15 million ounces. AI in data centers, server farms. High-frequency trading computers. AI training clusters. Every system demanding maximum conductivity with minimal resistance specifies silver. This sector alone grew 47% year-over-year in 2024. Total industrial demand, 680.5 million ounces. Global mine production, 819.7 million ounces. Recycling added 193.9 million ounces. Total supply, 1,013.6 million ounces. Total demand across all categories, 1.16 billion ounces. The deficit, 149 million ounces in 2024. Fifth consecutive year of deficits. Cumulative 5-year shortage, 820 million ounces. That's 25,500 metric tons of silver that simply disappeared from inventories. 1 year of global production gone. Where the supply actually comes from. Mexico leads global silver production, 5,700 metric tons in 2024. China, 3,900 metric tons. Peru, 3,100 metric tons. Those 3 countries account for 50% of global mine output. But here's the critical detail: 72% of silver comes as a byproduct. Lead zinc mines. Copper mines. Gold mines. Silver isn't the primary target. It's what gets extracted while mining something else. Which means silver supply doesn't respond to price the way normal commodities do. If silver prices double, lead zinc miners don't dramatically increase production. They mine lead and zinc. The silver just comes along. Silver mine production peaked in 2016 at 900 million ounces. It's been declining 1.4% annually since then. In 2024, 819.7 million ounces. Projected 2025, 835 million ounces. A 7.23% decrease from the 2016 peak despite prices roughly doubling. The invisible ceiling: new silver mines take 10 to 15 years from discovery to production. Development projects tracked by S&P Global Market Intelligence show 47 silver mines in development globally. Combined potential production: 185 million ounces annually. If they all come online, which they won't. Most mining projects fail. The supply can't catch up. And then Samsung made an announcement. When a breakthrough technology selects a specific material, that choice becomes permanent. Not because of preference. Because the entire engineering architecture gets built around that material's unique properties. Changing materials later means redesigning everything from scratch. Samsung's solid-state battery locked into silver in 2020. The technology: oxide-based solid electrolytes. Unlike lithium-ion batteries that use flammable liquid electrolytes, solid-state batteries use ceramic materials. The challenge? Getting ions to move efficiently through solid matter. Samsung solved it using silver carbon composite layers as the primary conductor. Why silver was chosen: 3 non-negotiable requirements. First, ionic conductivity. Silver ions move through solid electrolytes 340% faster than any alternative material tested at commercial scale. Copper-based alternatives achieved only 67% of silver's ion mobility. The result? Charging times that made the technology commercially unviable. Second, dendrite suppression. Lithium batteries fail when metallic dendrites, tiny crystal structures, grow through the electrolyte and cause short circuits. Silver's crystalline structure naturally inhibits dendrite formation. This is what enables the 20-year lifespan Samsung advertises. Third, high-temperature stability. Fast charging generates heat. The silver carbon composite maintains structural integrity at operating temperatures up to 150 degrees Celsius. Alternative materials degraded after 500 charge cycles. Silver-based cells demonstrated stable performance beyond 2,000 cycles. The engineering lock-in occurred in 2023 when Samsung completed the S-Line pilot production facility. 100,000 square meters. The world's largest solid-state battery manufacturing line. Every piece of equipment, coating machines, pressing systems, assembly robotics, designed specifically for silver oxide chemistry. Retooling cost to switch materials? Samsung hasn't published figures. Industry analysts estimate $2.7 billion to redesign and rebuild the production line. Plus 3 to 5 years of additional development time. Modern parallel: Intel's transition from 32-bit to 64-bit processors in 2003. Once software developers built applications for 64-bit architecture, reverting to 32-bit became economically impossible. The installed base created permanence. Samsung just created that same lock-in for silver. The decision is made. The technology is built. The material is locked in. One company making one product doesn't create a supply crisis. What creates a crisis is when that technology becomes the industry standard and every competitor races to replicate it. Samsung showcased the oxide solid-state battery at the Inter Battery Expo in Seoul on March 13, 2024. The specifications they published: energy density, 900 Wh/L, double current lithium-ion batteries. Range, 600 miles per charge. Charging time, 9 minutes to 80%. Lifespan, 20 years or 2,000 plus cycles. Safety: non-flammable solid electrolyte eliminates thermal runaway risk. Within 90 days, every major automaker initiated partnerships or R&D programs targeting similar specifications. The documented response. Toyota announced June 2024 solid-state battery partnership with Idemitsu Kozen targeting 2027 production. Publicly stated goal: match or exceed Samsung's specifications. Projected silver requirement per vehicle: 800 grams to 1.2 kilograms depending on battery pack size. Volkswagen Group expanded partnership with QuantumScape in August 2024. QuantumScape's solid-state cells use silver-based anodes. VW committed to integrating the technology across its electric vehicle portfolio by 2029. VW sold 8.3 million vehicles globally in 2023. Hyundai Motor Group, which includes Kia, announced September 2024 development of proprietary solid-state batteries featuring high-conductivity metal composite electrolytes. Industry analysts identified the material as silver-doped ceramic compounds. Hyundai Kia combined global sales, 7.3 million vehicles in 2023. BMW partnered with Solid Power in October 2024, investing an additional $150 million. Solid Power's solid-state cells use silver-carbon composite cathodes. BMW's stated timeline: pilot production 2026, mass production 2028. General Motors and Ford both filed patent applications in late 2024 covering solid-state battery architectures featuring silver-based ionic conductors. The multiplication effect. 2024 electron volt sales, 17 million vehicles globally. 2025 projected, 20 million, IEA forecast. 2030 projected, 40.7 million, IEA stated policies scenario. Current EVs use 25 to 50 grams of silver. Traditional electrical systems. Samsung's solid-state battery, 1,000 grams, 1 kilogram, of silver per 100 kilowatt-hour battery pack. If just 10% of 2030 electron volts production uses solid-state batteries, 4.07 million vehicles times 1 kilogram equals 4,070 metric tons of silver demand from batteries alone. If 50% adoption by 2030, 20,350 metric tons. If 100% adoption, 40,700 metric tons. Total global silver mine production in 2024, 25,000 metric tons for all applications combined. Historical parallel: rare earth magnets in 1985. When neodymium iron boron magnets proved superior for hard drives and motors, every electronics manufacturer pivoted to the technology within 36 months. Global neodymium demand increased 2,700% between 1985 and 1995. China recognized the strategic importance, consolidated processing capacity, and now controls 95% of rare earth refining. The technology Samsung demonstrated isn't proprietary. The patents cover specific implementations, not the underlying chemistry. Every competitor can develop similar oxide-based systems. And they are. The demand isn't coming from one factory. It's coming from an entire industry. When demand surges for oil, steel, or copper, mining companies can accelerate production. Drill more wells. Open new pits. Run mines at higher capacity. Supply responds to price signals within 12 to 24 months. Silver doesn't work that way. 72% of silver comes as a byproduct of other mining operations. The economics are determined by the primary metal, not silver. The mechanics of byproduct mining. Lead zinc mine in Bolivia, the ore body contains 8% lead, 6% zinc, and 280 grams of silver per metric ton. The mine economics are calculated based on lead and zinc prices. Silver is bonus revenue. If silver prices triple but lead zinc prices remain flat, the mine doesn't expand production. They're mining for lead and zinc. The silver just happens to be there. Gold mine in Nevada, or grade 1.2 grams of gold per ton, 18 grams of silver per ton. The mine operates because gold at $2,400 per ounce makes extraction profitable. Silver at $32 per ounce adds revenue but doesn't justify expansion. To increase silver output, they'd need to mine more gold ore. But there's only so much ore in the deposit. The 28% of silver that comes from primary silver mines? Those operations face different constraints. The development timeline for new silver mines. Years 0 to 3, exploration and discovery. Geological surveys, drilling programs, resource estimation. Year 4 to 6, feasibility studies. Engineering design, environmental impact assessments, permitting applications. Year 7 to 10, permitting and approvals. Government reviews, public consultations, legal challenges from environmental groups. Year 11 to 14, construction. Building processing facilities, waste management systems, worker infrastructure. Year 15 plus, production begins. San Vicente Mine, Bolivia, discovered 2009. Produced first silver 2024. 15 years. Hermosa Project, Arizona, discovery 2012. Projected production 2028 if all permits approved. 16 years minimum. Pascualama Project, Chile-Argentina border, discovered 1997. Still not producing in 2025. 28 years and counting. Project suspended indefinitely due to environmental concerns and water rights disputes. The invisible barrier, capital costs. A new primary silver mine requires $400 million to $1.2 billion in upfront investment. At current silver prices around $32 per ounce, the return on investment takes 18 to 22 years to break even. Mining companies can't raise that capital for projects with 2-decade payback periods when battery technology might change in 5 years. S&P Global Market Intelligence tracks 47 silver development projects worldwide. Combined potential production if all reached commercial operation, 185 million ounces annually. But historical data shows only 23% of mining development projects successfully reach production. Equipment failures. Cost overruns. Regulatory delays. Community opposition. Financing problems. Realistic additional supply from new mines by 2030, 43 million ounces. That's 1,337 metric tons. Samsung's battery technology could add demand of 4,000 to 40,000 metric tons by 2030 depending on adoption rates. New mine supply won't close the gap. Not even close. The recycling limitation. 193.9 million ounces of silver were recycled in 2024. That came from jewelry and silverware, 58 million ounces. Industrial scrap, 89 million ounces. Photography, yes, it still exists in medical imaging, 14 million ounces. Electronics, 33 million ounces. The problem, industrial silver recycling requires specialized facilities. Circuit boards contain 0.2 grams of silver mixed with copper, gold, plastics, and toxic materials. Separation requires chemical processing. It's profitable when you're processing 10,000 tons of e-waste. Not profitable for small-scale operations. Solar panel recycling presents an even bigger challenge. Each panel contains 20 grams of silver embedded in silicon cells, encased in tempered glass and aluminum frames. The silver is fused into the photovoltaic layer. Extraction requires crushing the panel, chemical dissolution, and electrolytic separation. Current recycling recovery rate, 47% of embedded silver. The other 53% is lost to processing inefficiency or remains in waste streams. And here's the timeline problem: solar panels installed in 2024 won't reach end of life until 2049. That's when recycling can recover the silver. Batteries going into EVs in 2027 won't be available for recycling until 2047 if Samsung's 20-year lifespan holds. The supply can't scale. Not with new mines. Not with recycling. Not in the timeframe the EV industry demands.